Okay, folks, happy Father's Day. And we are about to see the opening price action on crude oil. This is how we're going to begin it. Crude oil is spiking up over 5% at the open here, with a high on the session so far being $77.49 the barrel. This does not bode well for the opening price action of the major equity markets. Let's take a look at natural gas. Natural gas spiking up 4.24%. A big move here, but to put things into perspective, natural gas does have very large moves a lot of times on Sunday nights. So is this the biggest move I've ever seen on natural gas? Nowhere near it. But this is a measurable move. We got to keep an eye on it because this can get out of control really, really quickly. Let's take a look at the bond market. We'll take a look at the 10-year yield. 10-year yield is moving lower at the open. The US dollar. Notice how I'm working backwards here. I want to let the equity markets simmer down here a little bit. I'm going to assume that they are down. I don't know. I have not looked, obviously. US dollar attempting a breakout here. Big gap up at the open. Let's check in with gold. Gold spiking up about 0.33%. We were up higher. The high of the session was 3,476. We went negative at one point here and have since bounced back. Huge volatility in gold. Let's check out silver. Silver up fractionally. PA, palladium, that's down 1.22%. We have a position there. PL, platinum, that's also down. All right, let's take a look at equities here. NQ opening down, not that bad. This is a new contract on the NQ. That's why we're down, yet we look like we're up. E-minis. Down 0.41%. We are coming back here a bit. Let's go back to oil for a moment. Oil now up only around 3%. A little bit of a reversal bar. Let's let this thing simmer down. Let's say hello to folks. And again, happy Father's Day to everyone. Mr. Tim. Good evening. Thank you, sir. Thanks, Tim. Happy Father's Day to you as well. Jeff, thanks for the auto check, my friend. Appreciate that. Lee Cable, welcome. George, happy Father's Day to you, my friend. Boring summer ahead in stocks, narrow trading range. Yeah. It's hard to argue with that. Okay. What happened? We go. I've been taking a look at Bitcoin. Bitcoin now up They had a rocky weekend. Copper reversal bar, 15-minute reversal bar. Franklin, welcome. Happy Father's Day. Let's check out foreign currencies. We already did the dollar. Let's take a look at the euro. Let's go to the weekly chart. Well, actually, we're gapping down here. We'll go to the weekly chart. Very strong week last week on the euro. Yen consolidating very nicely. I think we're going to break out on the yen. This is a multi-month consolidation now on the Japanese yen. And if you're worried about what could be an additional catalyst besides all the geopolitical risk out there, look up yen carry trade. You do not want to see the Japanese yen ripping up higher. That means that yields are probably moving up higher over in Japan to address their inflation problem. So 6 minutes in, we covered a lot here already. Let's go. I want to set up a couple of alerts here. I want to see if we've made new lower lows. Or higher highs, for that matter. Okay, I'm going to try this again. All right, it's not letting me do it. Okay. All right. Why do I feel like I missed something? Why? Volatility. Right, volatility up 1.42%. On the week ahead commentary, which I sent out to members, we spent a lot of time talking about the price action on volatility. And volatility had a very, very good week last week and a day on Friday. The lovely Jody, welcome. Let's wrap this up with corn prices. Let's go to the weekly view. Corn looking very good here. Very, very good. At support. I think we're going to rally. This is last week's price action. I think we're going to rally on corn. Soybeans. I think we're going to rally on soybeans. Wheat. Wheat is consolidating very, very nicely here. I'm not as bullish on wheat as I am on the other ag names, but looking really, really good. I haven't checked in for a while on live cattle futures, and they had a rough week last week. They hit all-time highs. Our cattle stocks here in the United States are at the lows since the mid-1960s, if you can imagine that, with our population probably a third higher than what it was back then, if not more. Let's go back before we segue on to the rest of the show. I want to keep an eye on oil very, very closely. Oil's holding gains here, folks. Okay. All right, let's get to it. All right. First off, if you're not part of our forum and you want your stock chart request reviewed, you got to be a part of the forum. You got to head on over here, use this link, sign up, and enter your request within the next 5 minutes to this list here. Lee Cable, you got it. George, you got it. That's it. I only have 2. I got to refresh. Maybe I missed a few. Yeah, we have room for a few more here if you want to add them. So last week, you can see here, we booked profits on Hershey as well as on CSX. So we raised cash last week. Long story short, we held on to our short positions. We are currently short of the Qs. We still do have long bets on, but we are less long of the market than we were this time last week. We have bigger cash reserves waiting to put it to work. Get on the phone. Yeah, it's free. No credit card required. Okay. Before I forget, TrendSpider. Use the link below on YouTube, link above on Facebook and Twitter. I usually I give you a 35% discount. Use my link, head on over, and you get up to a 38% discount, depending upon the plan that you choose. Head on over, take advantage of it, and help support the channel. Use my links there. I would appreciate it. All right, let's get to it. Let's talk about the week end and the headline news. Usually there's not a lot of it. Sometimes you get a news dump on a Friday afternoon. Lots of times they dump news on a Friday because hopefully it doesn't have much of an impact by the time the futures markets open up on Sunday. And by Monday, hopefully everybody's forgotten about the news dump of Friday. It happens a lot because it works. This weekend's a bit different because the news kept a-flowing all weekend. So this has been updated. That's why it says Sunday. This is actually as of either Friday evening or Saturday morning. Off of Zero Hedge, Trump rejects Netanyahu's request to join war. Okay, good stuff, right? That helped placate the futures markets on Sunday night. However, change of tune as of today. Trump hits at possible U.S. entry into war amid stepped-up Israeli daytime attacks on Tehran. So the game is changing by the minute. What does that mean? Doesn't mean we're going into the war. It just means indecision. And traders do not like indecision. Simple as that. Now, fast forward to Jeff Gundlach. I forget where I left off here. Did I share my audio? Let me play through this. I'm going to play snippets of this because Jeff has been saying what I've been saying for a long time now. Let me stop sharing. Make sure I'm sharing my audio. I was not. Good thing I checked.
2007.
Let's get that audio up there. Why is it so low?
It's funny. It's going to happen, but it's getting close. I feel that the environment feels a lot like 1999 relative to AI is just map over .com for AI. I also think it feels a lot like 2006, 2007. It's funny. One of the hardest things to do in the investment business is to learn and fully appreciate how long everything takes to happen. It takes forever for the problems to actually show up. It takes forever to the defaults to finally arrive. But people anticipate changes with great enthusiasm. So AI, of course, was embraced with great enthusiasm. Electricity was all the rage.
Okay, so basically what Jeff is saying here is that we're at, in terms of valuations in the equity markets, We're at levels not seen since 2000, depending upon how you look at the valuation, whether we price to book, price to sale, CAPE ratio, which is the Shiller PE ratio, or the Buffett indicator, whatever you want to call it. The markets are extremely overvalued, and they have been overvalued for a very, very long time. We have structural problems here, whether it be with our debt and spending, as well as geopolitical risk that's out there, and it's getting more in your face. The news cycle just seems to go from one geopolitical event to another. So the question then becomes, at what point do traders say, it's time to ring the bell here, it's time to feed the geese, let's book some profits, and let's raise capital and buy gold, buy silver, buy farmland? It's a better bet than where we are in this cycle for equities. Now, we're going to talk more about valuations in a moment. Let's just do some housekeeping here. In terms of news events coming out economically this week, we get the Empire State Manufacturing Survey on Monday. On Tuesday, retail sales, big number, very, very important number. 8:30, we get a bit of an inflation read. That's the import price index. 9:15 on Tuesday, industrial production, capacity utilization, business inventories. Watch out for that one. You see business inventories rise, then retail gets hit. Why? It's because they worry about retailers having to slash prices. Wednesday, building permits. That's a forward-looking indicator. You're seeing more sellers now enter the market and more buyers stepping in. So the imbalance that we have between buyers and sellers, that's beginning to lighten up here. So it's going to be interesting to see if building permits continue to rise. We're expecting 1.44 million, and that's greater than the prior month's read. Initial jobless claims, that's every week, and we have a Fed announcement week. There will be no rate cut this week. It's not going to happen unless, of course, we get a major, major geopolitical event that occurs, and it's quite possible. But as things stand, as we know them right now, even though we have two hot wars going on, whether it be Ukraine, Russia, or Israel and Iran, they're not going to cut rates. Is the market closed on Thursday? Ugh, you got to be kidding me. Yeah, the market's closed on Thursday. Oy vey. Okay. Friday, Philly Fed survey, and we get the U.S. leading economic indicators. We're going to be talking about those numbers. Note how we've seen negative reads, and they're expecting more negative reads. Philly Fed has been negative for a while now. These are the leading economic indicators for the U.S. economy. The only thing that hasn't been struggling of late are jobs. Now, here's the Fed Watch tool. Again, July, or June, I should say. My mind's already in July. There is no chance of a rate cut, not even in July. September, this number has increased to 72.5% probability of a cut. October, 86.6% probability of a cut. So June, the earliest at this snapshot in time. Now, if the wheels begin to fall off of the economic truck, then they're going to have to move more quickly. But that action for a July cut is going to have to mean that we saw some real serious damage to the economy, warranting a big intervention or early intervention by the Federal Reserve into the bond market by cutting rates. Now, in terms of valuation, we go over this chart almost every week. I'm not going to use the Shiller. The Shiller, we're about just shy of 37%. 37 PE multiple, I should say, not a percentage. But the Buffett indicator is at 200%. We haven't seen overvaluations like this in the equity markets for this length of time since the 1929 stock market crash. So I don't want to be hyperbolic, but we do want to be factual. The sequential number of quarters of us being strongly overvalued or overvalued is the greatest length of time since just before the stock market crash. So 1929. So just be aware of it. Another way to view it is through this chart here. This is remarkable. This is the global stock market, okay? This is the U.S. stock market, global stock market. This is unthinkable. The global stock market cap to global GDP is now at 117%, the second highest in history. The ratio has increased by 27% over the last 5 years and sits only below the 2022 levels. Since 2008, global market cap has risen twice as fast as global GDP. This is all because of deficit spending and cheap money. To put this in perspective, the 2000 dot-com bubble peak, this percentage was at 110%. We're more expensive on global equities than we were just prior to the dot-com bubble. Meanwhile, the U.S. market cap to GDP ratio has reached a massive, let's call it, just rounded, 200%, just 4 percentage points away from an all-time high. And the all-time high was not too long ago. Valuations are rising faster than economic growth. Let's go to comments. Let's pause here. Gun Lots is tremendous, very level-headed. Yes, he is, very much so. Very successful guy. PE reset will come very soon. That's how we're positioned right now, is for that PE reset. You know, I always like to say there's going to be a great buying opportunity out there. The question is, will you have the capital? You know, so that's the goal, is to have the capital when the market begins to bottom out and you begin to buy when there's blood in the streets. Now, we've talked about rear view mirror PE multiples tonight, but now we want to talk about the forward looking. We are back near 22 times earnings on the S&P 500. That's pretty expensive. JP Morgan notes that the S&P 500 10-year forward returns are not great up here. So valuations moving forward are expensive. And when you take a look at the valuation of the market, the consensus forward 12-month PE valuation, extremely expensive on the S&P 500. You're seeing some opportunity here in energy stocks, which have already really had a decent run last week, but I still think you could buy those. Utilities would be interesting were not yields moving up higher. They're holding a weekly breakout. Now, if utilities break down, scratch that. If yields break down and bonds break out as a safe haven play, then utilities become interesting. Financials, they got hit last week. I'm not interested in the financials right now. Energy is the place for me, along with emerging markets. And frankly, gold, silver, more so silver than gold at this point. Asset return expectations by region. Japan, forward-looking returns because of inflation are probably the best in Japan. Eurozone, second best. China, third best. So you can see here that markets outside of the United States are poised to do very, very well, because the problem with the United States is that we have so much debt that the government is acting like a giant sucking sound of taking capital and sending it overseas to finance our deficits. There is no indication whatsoever that there's an appetite to cut government by any measure that is really going to help the economy. And we're going to issue more debt vis-a-vis the big, beautiful bill. I got to be honest, I'm not happy about it. Am I happy that the SALT deductions are being raised? Yes. Should they be? Probably not, because those SALT deductions only impact those states that are sanctuary states, like the states that like the state I live in, which is New York. And frankly, we shouldn't be subsidized by the rest of the country due to our high, inefficient, corrupt bureaucracy here in California, Connecticut, New Jersey, etc. So I think that we need to really begin to look at areas outside of the United States again. Japan. I'm not big on the Eurozone. I'm big on Eurozone defense stocks because the United States will be pulling back from the Eurozone. Those defense stocks are looking really, really good. China, I like the periphery. I don't like to invest directly in China because someday there's going to be a hot war between us and them. I prefer not to have capital invested in China. I prefer to look at emerging markets ex-China. So that is where I think the sweet spot is. Brazil looking really, really good. Asia looking really, really good, ex-China. And that'll give you the exposure to Japan. EMXC is an ETF that I own. We're looking to add more. It's rallied. We're looking for a pullback to add more. But that is doing very, very well, especially if the US dollar rolls over. Now, we're seeing a bit under the dollar right now. So that might give us a bit of a pullback there. U.S. recession scorecard. Yield curve. Check that box. We are steepening on the yield curve. We have no new monthly daily higher. We have no new monthly higher high, no new monthly lower low. We're kind of like just consolidating, but we are steepening on the yield curve. Fed funds rate versus nominal GDP growth, recessionary. Unemployment claims, neutral. Not much happening there. Unemployment rate, neutral. Not much happening there. ISM new orders minus inventories. Not much happening there. Here, I mentioned this early. We're going to get the new report coming out this week. Conference Board leading economic indicators. Recessionary. They're negative. They have been negative. Something just happened here. Let's go back and check out the futures market. I think that was the NQ that may have made higher highs as I see oil prices pressing lower here. Yeah, NQ made a higher high. So we're about flat now on the NASDAQ. Let's check in with the E-minis. Still down a bit. But I have to say, it's pretty impressive price action with oil prices moving up higher. Now, I think that as oil prices, if they do maintain this rally and they proceed to new higher highs, I think the equity markets are going to roll over because the inverse correlation is going to get bigger and bigger because we can take higher oil prices, but not at this rate of change. No way. And we're going to go to reasons why in a moment, why it may get a little bit tougher out there in the oil market. So bear with me one moment. We'll check back in if we have any more alerts that fire off. Okay, so going back to this here, Conference Board leading economic indicators. Here is the divergence. Leading economic indicators stopped going up a couple of years ago. Yet the S&P 500 has continued to grind higher. Note how, for the most part, going back to 1985, the correlation is pretty tick for tick. But there is a massive divergence here between leading economic indicators and the S&P 500. So if you're wondering, what don't you know that you should know, this is it. This is one of them. Now, oil prices, this is a weekly chart. They blew out last week, 12.29% on the week. This is the USO. And now they're gapping up yet again another, we were up 5%. Now we're up only about 2.5%. But still, very, very very, very difficult rate of change for the equity markets to absorb, especially if you're looking for the Federal Reserve to cut rates. Now, you may be saying the Federal Reserve backs out food and energy, Bob. No, they don't. They say they do, but when it's convenient for them to do nothing, then they're going to say, you know what, we need to pause here. Don't raise rates, oil prices, a little bit inflationary. So they do not ignore food and energy. They do watch it. They just don't want to cop to it. They'll cop to it when it's convenient for them. How this is off of Kalshi. I think this is a betting board, and they're projecting going out right now. They're projecting oil prices at around 94.10. Can I get this up here? I should have had this ready. If I have to sign up for anything, I'm not going to go in there. I got this off of Twitter. I think I found it. I did. Here it is. Okay. We skyrocketed today above $104 a barrel. We've since pulled back to where we were about yesterday. But clearly, traders are betting on higher highs here for oil prices. Remember, we're only at $75 the barrel. Now, here's the problem for the equity markets. One of the on Poly market, will Iran close the Straits of Hormuz? There's a 57% belief that, and this is probably higher now, that there is a chance that they're going to close the Straits of Hormuz. Now, I mentioned over on the weekend commentary with members, I said, I'm not going to get all too worried about the equity markets here unless, of course, a couple of things happen. One of them is the threat of the closure of the Straits of Hormuz. What does that mean? It doesn't just mean that Iranian oil comes off the market. It means Saudi oil, at least a portion of it, comes off the market as well. And if Iranian oil comes off the market 100%, guess who the number one buyer is of Iranian oil? It's China. So if China has to go out into the open markets and begin to buy oil on the open markets, then oil is going to skyrocket. And if they close the Straits of Hormuz, forget about $100 a barrel. We're probably going to $150 a barrel, because one of the problems that we have is that the rig count is at its lowest level. This is offshore drillers at its lowest level since 2021. That's why you saw the energy exploration stocks explode last week. We own EOG Resources, Gush, the leveraged product. We have exposure to LNG, Flex LNG. They all did great last week. We had a good week. So I think that these names are going to continue to do well, because they're going to have to, for national security concerns, get more of these rigs online to avoid an energy shock. Let's go to comments. Hey, Paul. Happy Father's Day to you, my friend. We make my year if silver reaches. Yeah, you and me both. You and me both. Early retirement. If oil rises out of China, out of Iran, China suffers. Yes, definitely does. They do get most of the. Yes, that is correct. Absolutely correct. Okay. So, folks, please head on over. Take advantage of the offer over on TrendSpider. They have the Father's Day sale. Get up to 38% discount there. Link below on YouTube, link above on Twitter and Facebook, and get that up to 38% discount while it lasts. It's lasting for another 6 hours and 25 minutes. So take advantage of it. So let's do a little bit of a demonstration here. Let's take a look at the chart requests we have for this evening. I don't think we have many. tonight. Okay, we have a couple of extras. Bonnie Bean, thank you very much. Thank you so much. I was just about to say Happy Father's Day to you. Bonnie Bean's a female, by the way. I just caught myself. You got it, Talon. PLTR, you got it. FLNG, absolutely. For disclosure, we are long of FLNG. URGN, is that a uranium play, Lee? UNG and AA. APLD for Franklin. Do we have everybody covered here? Wow. Oh, here we have a uranium play. We already have PLTR asked for. A popular stock tonight. NUE. That's, I believe, Nucor and Halliburton. All right, let's get to it. All right, first, let's begin with a bit of seasonality. Let's talk about it on oil since we have it up here. Summer driving season. We have the month of June is the best month for oil prices for the past 19 years. So pretty good data here for oil. So expect more upside pressure if you appreciate seasonality, which I personally do. As for the S&P 500, up only 55% of the time over 32 years. I need less data. That's a little bit too much data. Let's go back to 2000. Wow, even worse. Up only 50% of the times in June. As for the trip queues, going back 25 years, up 58% of the time. Let's see what this coming week looks like. Up only 47% of the time. But then we grind up as we proceed into the month of July. So we're halfway through the month. Let's begin taking a look at our chart requests. We'll begin with Neighbor NBR for Bonnie Bean. Now, I spoke about Neighbors a few weeks ago as a stock that was interesting. And last week, we broke out actually, we broke out 2 weeks ago. Bonnie, this is a tough one. All right, we need to break it down into a couple of categories. For a short-term trade, there is probably more upside here. Probably up and into this fractal resistance level at around 42.70. Short volume has paused here a little bit. That is not short interest. This is short buying or short selling, I should say, as a percentage of the overall volume. So we're probably going to go up higher. Would I initiate an investment at this level? Probably not. I would really like to see a retracement back down to support. maybe at around 30 bucks, I would entertain it, assuming that we pull back, retest, and then the following week we retest yet again, and then we begin to get follow through. So I would nibble, small conviction, small measure of conviction, and then as you begin to break out higher, build on your position, and that just goes to show you have a greater amount of conviction towards the upside. But short term, I think we can go higher. You did see some selling off the highs of the week, but given the price action, if oil opens up strong tomorrow, you're probably going to get more upside here. Just be aware that you do have resistance immediately above. Let's overlay the fibs. So the fibs are kind of confirming what I suspected, was that you have support in that $30 per share range. The support level that the Fibonacci's is showing is at 31.56. I had it around 30. So I think that you can be a buyer in that range between $30 and 31.56 per share. But nibble, nibble, nibble. Short positions, small positions. Let's go to seasonality. Not a lot of great seasonality here. And keep in mind the whys behind why these stocks are making the moves that they are. It's because of threats out of the Middle East. Now, I can't tell you how many times I've seen breakouts out of threats out of the Middle East, and then all of a sudden, once the headline risk goes away, the stocks fade. So you may not be thinking that you're going to get a pullback to that support level because the heat of the moment, but trust me, heat of the moments dissipate pretty quickly. And we are we have very short-term memories, at least in the States. On Friday, you had a bearish reversal day. I would wait for a pullback here. I'm not a buyer of neighbors. I'm not saying you can't gap up. It's just not my style to buy a stock when it's already left the barn. Really, for me, I would have been watching the daily chart. We broke out on the 3rd of June, retest 1, retest 2, nibble there, breakout, or a follow-through move on the 6th. It would have added more consolidation. You had a breakout on Friday, but it was rejected. So just be careful here. It's an early stage recovery. So you're going to get a lot of backing and filling here. Here's a monthly chart. There's a lot of damage been done here. Here's your downtrend channel. So while right now in this snapshot in time, it looks as though it can't do anything but go up. Remember that we remain in a bear market on these energy stocks. Moving on to XLF. So last week was not a great week. We broke support on the banks. When you take a look at a daily chart, we had broken down on the 4th out of this wedge formation. They tried to rally, which they did. They retested a breakdown point, and it was rejected, and we gapped down lower on Friday. I think the probability of lower lows is likely. You're seeing short volume begin to pick up. So you have shorts leaning into the banks en masse. I'm not a buyer here of the banks. Would I short them? Probably not. If I was going to, I would want to see a rally and a rejection at $50.56 per share. That represents resistance at current. Yeah, we broke down through, these are the automated trend lines. We broke down through, hell, we broke down through quarterly, in dash line is quarterly support. That was back here in May. We failed to recapture. Then we broke down below daily support on, technically on Thursday. We closed off the lows of the day, but then we had a follow-through day on Friday. I'm not a buyer here. I would avoid the banks. I wouldn't short them, but I wouldn't buy them either. Let's check in with Palantir. 2 requests for Palantir tonight. So Palantir weekly time frame. We technically last week broke down on, excuse me, not last week, the week before, broke down below a lower band of support. But last week we bounced back very, very strong. It doesn't appear as though that we recaptured what was support. It looks as though it remains as resistance. Volume was okay. It was slightly below average. Let's check out there's no automated trend lines here to speak of, no fibs, daily chart. We've gone nowhere for 3 days. I'm not a buyer here. I think that 140 is resistance for Palantir. We closed at 137.40. I'm not a buyer here. And I think it's a price to book basis. I saw it on Twitter earlier, or X. I don't know if I'm going to be able to find it that quickly. Let's see if they hashtagged it. They didn't hashtag it. It's either on a price to book or a price to sales basis. Palantir is here. Here we go. I found it. So Palantir, at the highest sales multiple in its history, over 83 times price to sales right now. There is no company this big valued, this richly, that has worked out longer term. So I'm not a buyer here. I think valuation is just ridiculous here on Palantir. And Tim just typed in that we have a PE multiple of 600. I don't know if that's rear view mirror or forward looking, but pretty goddamn frothy. I don't care how good of a company it is. It's not going to end well. So Palantir, I would avoid. FLNG. Now, the chart to watch on FLNG is not a daily chart or a weekly chart, although the daily chart is looking awesome. We'll come back to the daily chart in a moment. I want to begin this one out. We own this, full disclosure. I want to begin this conversation out with the monthly chart. And we are in a very tight consolidation. Going back a number of now years. And I think that if we close above 2670, we're going a lot higher on Flex LNG, probably LNG as well. We'll come back to FX. I want to see how LNG did. Yeah, they're near at 52-week highs right now. Flex LNG has not performed as well as Cheniere. So let's go to the weekly chart now. Beautiful bullish key reversal bar last week. They tried to take it down. It reversed to close up. I think at a bare minimum, we're coming up to around 27 bucks a share. There's going to be a lot of overhead supply up there. So right now, this thing is yielding about 12%. We bought it when nobody else wanted it. We're collecting a yield of about 13% on this. And I think that this is going up higher. I'm very bullish on Flex LNG. Here's the daily chart. We had a bullish key reversal on a weekly time frame as well on a daily time frame. We have volume, we have price action, we have momentum, bullish on Flex LNG. Let's check out what are the insiders doing? No data. Let's check out seasonality. We're in a very favorable period of the year, up 63% of the time in June, 71% of the times in July. So seasonality, that's like at the wind at the back of FLNG. Bullish. Nothing else to talk about here. Very bullish. URGN, Eurogen Pharma. I'm not familiar with this company. Impressive that we broke out and above this fractal resistance level. Lots of short volume here. So in all probability, a very, very high short interest, which is propelling the stock up higher. What's the news? Eurogen Pharma shares are surging this week after the company gained FDA approval for blah, blah, blah. The positive clinical trial results, blah, blah, blah. Okay. They got an upgrade by Scotiabank to $47 per share. Good headline news coming out for the company. Great price action. Let's go to I'm on a daily chart. I do not mean to be on a daily chart to begin analysis. Weekly chart looking awesome here. Now, how would I play this? You're seeing short volume increase. What does that tell you? It means the shorts, they smell blood in the water here, and they're going to try to take this down. So maybe they're right, maybe they're wrong. I don't know. I'm not that smart. How would I play it? These are your, I never reviewed this chart in my life. If I did, I've forgotten completely about it, and I certainly didn't draw these lines. This is the algorithm. I'm not a buyer here, but I will tell you where I am a buyer. You hit not one resistance level last week, but two resistance levels on a weekly time frame. In fact, I want to go back to the monthly chart here. Yeah, you can't buy it right now. You have way too much resistance above. Again, click of a button. Amazing. You have a lot of overhead supply here. I'm not a buyer at these levels. When would I be a buyer? Since we have short interest rising, could that cause more of a short squeeze if you have weak shorts entering the trade? Yeah. You can see a short squeeze and the shares keep moving up higher, but eventually they're going to run out of steam. So where would I be a buyer? Right here. $10.64. I would nibble if they sell it off really, really hard and they hit $9.39. I'd be more aggressive of a buyer. Tight stop right below that mark. Let's go to the daily chart. Good price action on a daily time frame. I think we already went over this. Looks good, but I can't buy it here. I know there's too much overhead supply above as measured by the automated trend lines, so I can't buy yet. I would be a buyer on any pullback down to $10.64, all the way down to $9.38. That's more my wheelhouse for this stock. Next chart up. UNG, natural gas ETF. I believe it's an ETN. So we know in the futures action tonight that UNG is up, but that's subject to change. Natural gas is called the widowmaker of the commodity markets for a reason. It's by far the most volatile commodity out there. So, right, the setup that I'm seeing here is a very tight consolidation. We had big volume last week, but we did rally off the lows of the week. So it wasn't pure selling. You had some buyers in there bidding it off the lows. I would rather wait for the breakout above this upper band of resistance, but I think it can be bought. Let's go to the daily chart. Yeah, I mean, here's the daily chart. This wants to go up. Not as much short volume. You could argue they broke it out on Friday on a daily time frame. I think you can nibble here on natural gas based upon the daily chart. I wouldn't get overly exposed until we get until around Thursday. Watch and see how it's performing on the week. Are we pulling back? Are we retesting support? Is it holding? Are we getting follow through? If we're getting that type of behavior, then I would be more bullish. But you don't want to be caught in a breakout like you had back here on June the 6th. Then it fails, and then you're sitting there going, what did I do? I got to overweight this commodity with the nickname Widowmaker, and I may have made a mistake because I was undisciplined. Wait for a pullback and a retest. I'm fine with you nibbling now. Small position, 20, 25% of your attended allotment. Add more on a retest and then a follow through. You want to get that follow through. So that's a UNG. And I think you're going to get it. Alcoa. Lots to unpack here on Alcoa. Let's get rid of the indicators. Let's go to a weekly chart. Bearish reversal week, but we did break out. You had a nice little flag setup that formed. We had gapped up here the week of May the 12th, retraced, good stuff, filled the gap. Then we got follow through. It held the breakout on the week. That's the most important. So what you're looking for this coming week is a retest. And it doesn't have to be exact. Leave a little bit of sensitivity on there. A retest of support. Let's check out seasonality. There's way too much data here, 50 years worth of data. Now we have half that data. This is not a seasonality play at all, really. Maybe if you want to argue, you want to buy in August aggressively, maybe even now you want to buy some and then continue your building your position into August, and then you get a nice bump up going into the year end. And then maybe you want to think about booking profits in December on strength because January is not that favorable. So that's my take here on Alcoa. Let's see if the daily charts have anything. Let's bring up the automated trend lines. Yeah, we had a failed breakout on Thursday. We successfully retested support on Thursday, but let's just say we closed at it on Friday. I'm not going to be negative, but I'm not going to be positive. It's a very difficult call to make here that we held support. Let's just say we closed at support. If it gaps down, I would wait for support down here at around $27 a share if you're going to nibble. And you're going to have resistance up here at $30 per share. So I would wait for a pullback here on Alcoa. APLD, Applied Digital. You don't want to buy this. You know, let's go to the monthly chart. So you're welcome, George. Anytime, pal. Lee, you're welcome. So it's worth pulling back to a monthly chart here because, you know, you can form an opinion very, very quickly if you're looking at a daily chart. You know, you did not have a good Friday, but it doesn't tell me the entire story. I haven't looked at this chart in years. So the weekly chart, it looks like it already had a burst up higher. The run could be done here. But then when you take a look at a monthly chart, and this is why I'm an advocate for multi-time frame analysis, meaning don't analyze a stock based upon a daily chart alone. You got to look at the weekly chart. You got to look at the monthly chart. So the monthly chart still looks good. This wants to break out, but it's getting rejected, and you have a lot of shorts trying to knock this stock down. The good news is that if they successfully close this stock above 12 bucks a share, the shorts are going to begin to cover, and they're going to get squeezed out. And you may have a tsunami of buying to punish the shorts. And this upper band of resistance here will be just that. It'll be a resistance level. It'll be a price target for you on the shares where you want to feed the geese. You want to book some profits. And as you can see, this month, there's a monthly chart again. We hit it, pierced it, then we failed to close above it. So shorts moved in because they knew where to sell. Would I be a buyer here? No, I'm not a buyer here. Let's go to the weekly chart. If they gap it up and close it next week above 12 bucks a share, okay, I would revisit it. Simply because I'm bearish right now doesn't mean I'm bearish next week. It depends upon the price action. They could easily gap this up. You start telling me we didn't put in a new weekly low after this horrible candlestick, I get interested, especially if they gap it up and close it above $12 per share. Then I'm really interested because now I'm saying, all right, well, I remember that stock. It had a beautiful monthly base. It wants to break out. The shorts are playing with it. I know that they're going to get squeezed on a close above 12 bucks a share. So I might be interested. So back to the weekly chart. Let's check out the Fibonacci retracement levels. Nothing close. Let's go daily view. And we already went over the daily view. I need to close above 12 bucks a share. If it continues to drop, when do I get interested? $9.75. Bullish. Uranium. A hot commodity of late, pardon the pun, partially intended. Okay, so we went over this a couple of weeks ago. I think it was Franklin that requested it. So, Dimitri, welcome. Dimitri, we already went over the e-minis, and if you want to do a request, all you need to do is sign up for our forum, and you put it in the feed every Sunday night. I put that link in there, no credit card required. So back to uranium. So we got a major breakout on the month. The month is not over. We have support at $34.34. I'm a buyer there. Now, if it continues to move up, and it just may with all the violence that's going on, this stock, or the ETF, I should say, ETN, this could go all the way up to 41 bucks a share. Now, on a daily time frame, you have a little bit of resistance above. Again, these are the automated trend lines, folks. I didn't draw these. At $37.60 per share. So uranium looking interesting. Let's go to seasonality. Not much here of a seasonality play. So bullish on uranium. Ideally, we get a retracement back down here. Touch, bounce. We'll keep this active for a few weeks. Set it and forget it. Okay. Next chart up. NVE. Wrong symbol. Let's try that again, Bob. NVE. Oh, no, I think it's NUE, Nucor. I can't read my own handwriting. Nucor. I haven't looked at this chart in a long while. These are my support levels. I haven't looked at this in a long time. I nailed it here. All right, so to the question, does this go up? I don't know. That's about as honest as I can be. So what's the strategy here? Well, the first thing that we want to identify on this chart is the trend. We're looking at a monthly chart because we want to identify where the stock has been to appreciate where it may be going. So we are in a crisp, clear, and defined down market or bear market. Clear and defined. We've already hit my support levels and we have bounced. The problem is for Nucor is that we have resistance right up at 123.96. So what's the play here? If you go by the statement that weak stocks tend to get weaker, you would wait for a retracement back down to 103.66 at a bare minimum. But you may not get there. There may be some underlying strength. Maybe the tariffs are going to help out the steel makers, U.S. Steel. Let's go to U.S. Steel for a moment. That's been behaving okay, really well. But you have merger news there and whatnot. So that's not the case with Nucor. Back to Nucor. If Nucor and the steel business as a whole is revitalized and it's going to go up based upon fundamentals, you may not get that retracement. I'd be a buyer of Nucor where I bullish on it at 123.56. That would take you above this upper band of resistance. It would take you above this resistance level as well. So you kill two birds with one stone. I'm not a buyer here unless I'm swayed by the weekly or daily charts. I'm not yet. I think there's a very good chance that it breaks out. It wants to break out, but it hasn't broken out. And we can hope that it breaks out because it looks so good right now, but hope is not a strategy because I'm never going to forget this monthly downtrend channel. We are in a bear market, and until the stock earns its right to earn our investment dollar, we stand by the old adage, weak stocks tend to get weaker until that changes. So right now we need to break out above 120, let's call it 124 per share. Thank you, Franklin. Same to you, my friend. You're very welcome. Jody, thank you very, very much. Jody, have a great weekend. Have a profitable week. The weekend's almost over. Okay, leaving it off. Last one up. My voice is going, so thank God it's the last one. Halliburton. Halliburton as well is in a downtrend channel. This is a monthly chart. We bounced off the lower band of support. New monthly higher highs. The question is, does it close there? Weekly view. Good week last week on Halliburton. We have a higher low. Again, these are the automated trend lines, folks. And for those just joining in, if you appreciate the value of TrendSpider, head on over. Use that link below on YouTube, link above on Facebook and Twitter. They have up to a 38% sale, Father's Day sale, ending in about 6 hours. Back to Halliburton. Here's the trend lines, automated trend lines. So weekly chart, no breakout yet. So we're just bystanders at this point. Good daily price action. I would need to wait for the weekly chart to show me a breakout because it'll move up higher, but it's also going to do a retracement back down. So if we do break out, a lot of people say, I could get it cheaper down here. That's stinking thinking. You don't want to think that way. You want to wait for the breakout on a weekly time frame, and more importantly, a close above that weekly breakout. And then wait for the retracement back down to retest. And you could get it right at the same price as we're trading at the closing price on Friday on that pullback. So, but this time it's different. We would have had a breakout on a weekly time frame, and you're buying a retest of support. And if you get that follow through, the greater the odds are that the stock is going to move up higher. That's the play on Halliburton. I think it's probably going to break out because oil prices are going up. That's it for tonight, folks. Have a profitable trading week. Tim, thank you very much for the feedback, and have a great remainder of your Sundays. Happy Father's Day, and have a profitable trading week. I'll talk to you soon. Be well.